The motorcycle industry is facing its worst crisis in decades, a perfect storm of economic pressures, shifting consumer preferences, and mounting financial challenges. Across the country, unsold bikes are accumulating in dealerships, with no sign of demand picking up anytime soon. Despite significant price drops, potential buyers are hesitant, unsure if they should wait for prices to fall even further or invest in motorcycles that may soon depreciate even more. The result is an industry on the brink, grappling with falling sales, shrinking margins, and a growing sense of uncertainty. Several factors have contributed to the rapid decline in motorcycle sales. The lingering economic effects of the global pandemic continue to disrupt consumer behavior, with many hesitant to make significant purchases due to financial instability. High inflation, rising interest rates, and a general sense of economic insecurity have led many to put off buying big-ticket items, including motorcycles. Even those who still have the means to buy are wary of making such a commitment, given the rapidly changing market and the risk of buying into a depreciating asset. The market has entered a cycle of stagnation, with dealerships offering deep discounts in an attempt to move inventory, but the discounts aren't enough to convince buyers to take the plunge. This combination of consumer hesitation and economic uncertainty has set off a chain reaction throughout the industry. Manufacturers and dealerships are left scrambling to adjust, but the damage is already being done. What was once a booming market is now in freefall, and the future of the motorcycle industry is uncertain. The collapse of the motorcycle market is underway, and it's much worse than anyone anticipated. Dealerships are drowning in inventory. The once thriving motorcycle showrooms are now filled with unsold bikes, and the situation is becoming dire. Dealerships across the country are struggling to clear out inventory that's been sitting unsold for over 200 days. With each passing May, the cost of holding on to unsold bikes increases, especially for dealerships that finance their inventory through loans. For many, the longer the bikes sit, the more financial strain they face, making it harder to stay afloat. Despite offering heavy discounts, the response from consumers has been lukewarm at best. Potential buyers are waiting for prices to fall even further, leaving dealerships with mounting debt and dwindling cash flow. Independent dealerships, particularly those that are family-owned and have been in business for generations, are feeling the effects more than others. Many of these dealerships have built their livelihoods on a steady stream of sales, but now they find themselves struggling to keep the doors open. With little hope for a quick recovery, some are being forced to shut down altogether. It's a painful reality for businesses that have been pillars of their communities, offering not only sales but service, repairs, and a connection to the motorcycle lifestyle. The financial pressure on dealerships is mounting, and many are turning to drastic measures to survive. Some are reducing their workforce, while others are getting creative with financing options in a last-ditch effort to encourage sales. However, the situation is worsening by the day, and the outlook for small dealerships, in particular, is grim. The industry as a whole is facing a crisis that seems to have no easy solution. Without a sudden influx of buyers or a drastic shift in consumer behavior, the industry's inventory backlog will only continue to grow, deepening the pain for dealerships. Manufacturers hit the brakes. As the crisis deepens, even the largest names in the motorcycle industry are forced to take drastic action. Iconic manufacturers such as Harley-Davidson, Indian, Honda, and BM have started cutting back production in an attempt to adjust to the oversupply of bikes sitting in dealerships. This reduction in production has ripple effects across the industry, leading to factory job losses as companies scale back operations to match the decline in demand. Once bustling factories are now slowing down, and workers are feeling the uncertainty that comes with such large-scale adjustments. For these manufacturers, the strategy is clear. reduce production to avoid further oversupply and financial losses. The decision to cut back is driven by the belief that demand will eventually rebound, but this hope is starting to look like a gamble. The motorcycle market, which was once fueled by innovation and strong consumer interest, is now stagnating. Manufacturers are struggling to keep up with the changing dynamics of the market, which are being shaped by shifting consumer preferences, rising costs, and economic pressures. As production slows, research and development, or R&D departments within these companies are being put on hold, further halting innovation in an industry that was once a hotbed of technological advancements. The pause in R&D is particularly concerning as the motorcycle industry has long thrived on innovation, with manufacturers constantly pushing the envelope on design, performance, and technology. The lack of investment in future products means that even as the market stalls, manufacturers are not positioning themselves for the recovery they hope for. The slowdown is a painful acknowledgement that the industry is in a precarious position, and it's unclear whether the market will bounce back or continue its downward spiral. For now, manufacturers are focusing on survival, but without innovation, the future looks uncertain. Financing nightmares for buyers. For many would-be motorcycle buyers, the dream of owning a new bike has become increasingly out of reach due to skyrocketing financing costs. Motorcycle loan interest rates have tripled since 2019, and monthly payments on bikes, especially premium models, are now unaffordable for a large segment of potential buyers. The higher costs are a result of several factors, including rising interest rates across the economy, inflation, and the general tightening of credit markets. As a result, buyers are finding themselves stuck with loan terms they can't afford, leading to a slowdown in purchasing activity. In addition to the higher interest rates, banks are also tightening their lending standards, making it more difficult for people with fair or poor credit to secure loans. The tightened credit environment means fewer people can even qualify for financing, which further reduces the pool of potential buyers. Even those who can afford the loans are facing challenges, as rising insurance premiums for motorcycles add another layer of financial strain. With insurance costs increasing alongside loan payments, many are opting to wait for the market to stabilize before making a purchase. This cautious approach is further dampening demand, leaving dealerships with more unsold inventory and no clear path forward. As the financing landscape continues to worsen, it's unclear how the industry will recover. Motorcycle sales, which were once fueled by accessible financing options, are now stifled by high interest rates, tough lending standards, and rising overall costs. Until these barriers are addressed, the industry will continue to struggle. Without changes to the financing process, many potential buyers may simply walk away, leaving manufacturers and dealerships with little recourse but to reduce prices even further, prolonging the market's pain. The surge in repossessions. As motorcycle sales continue to stagnate, another troubling trend is emerging: a sharp increase in repossessions. The number of motorcycles being repossessed has risen nearly 30%, the worst spike since the 2008 recession. The cause is clear. Many buyers who took out loans to purchase motorcycles can no longer afford to make their monthly payments, particularly on bikes that are increasingly overpriced in a shrinking market. As a result, bikes are being seized by lenders and sold at auctions for a fraction of their original value, leading to further financial losses for both consumers and dealerships. The surge in repossessions is exacerbating the market's downward spiral. As more bikes are seized and sold at a discount, the value of used motorcycles continues to fall, undercutting the entire market. This flood of repossessed bikes is dragging down the value of new and used motorcycles alike, creating a vicious cycle of depreciation. Dealers are unable to recoup their losses, and the perception that motorcycles are a poor investment is beginning to take hold among consumers. This trend is a major red flag for the industry. When bikes are repossessed at an increasing rate, it signals that buyers are no longer confident in their ability to pay off their loans or see value in the bikes they've purchased. The financial stress caused by high loan payments and the falling value of motorcycles is pushing more riders to abandon their bikes altogether. Until the market stabilizes, repossession rates are likely to remain high, further destabilizing the industry and prolonging the pain for both manufacturers and consumers. The used market freefall. As the new motorcycle market falters, the used market is facing its own crisis. The value of trade-ins has plummeted by over 35% in some segments, leaving many buyers and sellers in a difficult position. Potential buyers, unwilling to pay premium prices for new models, are turning to used motorcycles. But the oversupply of secondhand bikes is overwhelming dealers. With fewer people willing to purchase, dealers are struggling to resell used bikes at acceptable prices, creating a bottleneck in the market. The decrease in trade-in values is particularly concerning for sellers, as they are seeing their bikes lose value quickly. For many buyers, the appeal of purchasing a used motorcycle is no longer enough to offset the rapidly declining resale values. With no immediate way to offload bikes at reasonable prices, the used motorcycle market is becoming increasingly stagnant. As a result, both new and used markets are undercutting each other, contributing to the overall collapse of the industry. This double whammy of new and used bike inventories piling up is making it difficult for dealerships to stay afloat. For many, it's a race to sell as much inventory as possible before prices fall even further. However, the longer dealers wait, the harder it becomes to move their stock. The used market, once a thriving part of the motorcycle industry, is now in free fall, compounding the problems faced by manufacturers and dealerships alike. Prices have lost their grip. The motorcycle industry has seen prices rise dramatically in recent years, with new motorcycles increasing by as much as 40% since 2020. This sharp price hike has created a bubble in the market, making motorcycles, once considered affordable transportation options, now cost as much as luxury vehicles. Entry-level models that used to attract first-time buyers are now priced out of reach for many, and premium models have become prohibitively expensive for all but the wealthiest consumers. The result is a pricing bubble that has finally burst, leaving dealerships and manufacturers in a difficult position. Now that the bubble has burst, manufacturers are caught in a bind. They are slow to respond to the drastic shift in consumer behavior, unsure how to adjust their pricing without taking massive losses. Dealers are in an even more precarious situation. They are stuck with overpriced inventory, unsure whether they should cut prices to move bikes quickly or hold out in the hope that the market will stabilize. As prices continue to drop, consumers are holding back, hoping for even steeper discounts before making a purchase. The motorcycle industry, once buoyed by strong demand and rising prices, is now grappling with the consequences of an unsustainable pricing model. For manufacturers, the question remains, how do they respond to the collapse of the pricing bubble without sacrificing their long-term viability? The answer is unclear, but the next few months will likely determine whether the industry can recover or if it will continue its downward slide. As the market adjusts to the new reality of lower prices, the pressure on both manufacturers and dealerships is only increasing. The motorcycle industry is entering uncharted waters, and the road ahead is uncertain. The electric bike dream interrupted. The electric motorcycle segment was once seen as the future of the industry, a cleaner, quieter alternative to traditional gas-powered bikes. Many manufacturers, including major names like Harley-Davidson and Honda, made significant investments in developing electric motorcycles, hoping to capture a new market driven by sustainability. However, consumer demand has been slow to materialize, and the electric motorcycle dream has become increasingly interrupted by several significant challenges. One of the primary hurdles is the high cost of electric motorcycles. Compared to their gas-powered counterparts, electric bikes often come with a hefty price tag that makes them unaffordable for many potential buyers. While EVs in the car market have benefited from price reductions and government incentives, the electric motorcycle market has not seen the same level of affordability or support. High manufacturing costs for electric bikes, combined with limited economies of scale, have kept prices high, leaving many consumers opting for more traditional, less expensive motorcycles. Moreover, the limited range of electric motorcycles remains a key obstacle. While electric cars can cover hundreds of miles on a single charge, many electric motorcycles still struggle to provide a similar range, especially for long-distance riders. Range anxiety is a significant concern, and the lack of charging infrastructure further compounds the problem. Charging times for electric motorcycles are another barrier. While refueling a gas bike takes mere minutes, charging an electric bike can take hours, making them impractical for many riders who need quick, convenient refueling options. Without a reliable charging network and the ability to offer an alternative that matches the performance and convenience of traditional motorcycles, the electric bike market remains niche. As manufacturers continue to face these challenges, the future of electric motorcycles looks uncertain. Until these issues are addressed, electric motorcycles will struggle to achieve widespread adoption, and the segment's growth will likely remain stagnant. The worst-selling bikes of 2025. In 2025, some of the most iconic names in the motorcycle industry are struggling to sell their premium models, and it's clear that the market's downturn has hit hard. High-performance sport bikes, luxury cruisers, and electric motorcycles are particularly failing to connect with consumers, who are increasingly cost-conscious in the wake of the industry's broader crisis. Models such as the Harley-Davidson Livewire, the electric cruiser that once promised to revolutionize the motorcycle world, and the Indian Challenger Dark Horse, a high-end luxury cruiser, are collecting dust on showroom floors. Even once iconic sport bike brands are seeing their top-tier models languish unsold for months, some sitting on dealership floors for over 250 days. These bikes, once considered the epitome of motorcycle performance and style, are now plagued by high prices and steep insurance costs that deter potential buyers. The trend is clear. While the motorcycle market continues to shrink, high-end models are the hardest hit. The bikes that once embodied the pinnacle of power and luxury are now seen as too expensive for most riders, particularly given the economic pressures of 2025. With the financial burden of purchasing a bike, coupled with the cost of insuring and maintaining it, many riders are opting for more affordable, fuel-efficient alternatives, or even stepping away from purchasing altogether. The decline in sales for these premium models is emblematic of a broader shift in consumer behavior. As the market contracts, buyers are becoming more practical in their decision-making. The days of extravagant luxury cruisers and performance-heavy sport bikes may be numbered, as the motorcycle industry faces a new reality of lower prices and more budget-conscious consumers. While these bikes once represented the height of desirability, they now sit unsold, a stark reminder of the market's transformation and the industry's struggle to adjust to shifting demands. What history tells us? Looking back at previous motorcycle market crashes, especially the one in 2008, offers valuable lessons for the industry as it faces yet another downturn. The 2008 crash saw brands that were slow to adapt or unwilling to pivot perish, while those that embraced change and consumer needs were able to recover and thrive. The key to survival during these difficult times lies in flexibility and an understanding of what real riders want today. During the 2008 crash, companies that introduced affordable, fuel-efficient models experienced the fastest recovery, as consumers were no longer interested in luxury models that were costly to buy and maintain. Manufacturers that stuck with overpriced, overproduced bikes found themselves out of touch with the economic realities faced by their customers and, as a result, struggled to regain ground. Fast forward to 2025 and the industry faces a similar situation. With motorcycle prices rising significantly over the past few years, many consumers are now looking for more practical, affordable options. Manufacturers that can quickly adjust their focus to entry-level and mid-range bikes, offering value without compromising too much on performance, are likely to have a better chance of weathering this storm. The market's contraction has made it clear that consumers are not willing to pay a premium for luxury motorcycles when they can find cheaper, more efficient alternatives. This historical pattern shows that, in times of crisis, success depends on the ability to pivot and offer products that meet the needs of the market. The motorcycle industry is facing a crossroads, and only those brands that can shift their focus to affordability and practicality while maintaining a commitment to quality will have the best chance of surviving this downturn. The lessons of 2008 should not be forgotten, as they hold the key to navigating this crisis and emerging stronger on the other side. How the industry might recover. As the motorcycle market continues to struggle in 2025, recovery will require significant changes in how the industry operates. One of the most likely paths forward involves dramatic price cuts across the board. As inventory piles up and dealerships are faced with mounting debt, many brands may have little choice but to lower prices in order to stay competitive. Entry-level and mid-range bikes, which have always been the backbone of the industry, could see renewed focus as manufacturers aim to attract a broader base of consumers. Lower prices would make motorcycles more accessible, particularly for younger riders who are just entering the market, or for those who have been waiting for the right moment to buy. In addition to price reductions, more flexible financing options could be key to jump-starting sales. With loan interest rates having skyrocketed in recent years, buyers are now struggling to afford motorcycles through traditional financing methods. If manufacturers and dealerships can work with banks to offer better loan terms, lower interest rates, longer payment periods, or easier qualifications, more consumers could be enticed to purchase bikes. Trade-in programs may also see a resurgence, allowing buyers to exchange their current bikes for a better deal on a new model. These efforts would not only make motorcycles more affordable, but could also help address the growing inventory issue by bringing in more trade-ins. The recovery of the motorcycle industry may also involve consolidation. Smaller independent manufacturers and dealerships may be forced to close or merge with larger players in order to survive. The shrinking market means that only the strongest and most adaptable brands will remain, with a few key players dominating the space. While this consolidation may lead to less competition, it could help stabilize the market and ensure that the remaining manufacturers can focus on meeting the demands of a smaller, more practical market. What this means for riders. For riders, the ongoing crisis in the motorcycle industry has both positive and negative implications. On the one hand, buyers who are in a position to purchase a new bike may find that deals are emerging as dealerships and manufacturers work to offload inventory. Heavy discounts and lower prices could make this the most affordable time in years to enter the sport, especially for those who have been waiting for the right opportunity. Buyers may also be able to take advantage of improved financing options if manufacturers and lenders begin to offer more flexible loan terms. For those who have held off on buying, waiting might result in even better prices down the road as the industry continues to adjust to market conditions. On the other hand, current motorcycle owners may face a difficult period ahead. As resale values continue to plummet, owners who were hoping to trade in their bikes for new models might find themselves with significantly less value for their trade-ins than they expected. For those looking to sell their motorcycles, the market is less favorable, and they may have to accept a lower price than they anticipated. The decline in bike values means that owners may also struggle to sell their bikes quickly if they need to. The situation is particularly concerning for those who bought motorcycles during the price surge of recent years, as their bikes may have lost significant value. For new riders, the current market conditions could be a unique opportunity. With prices dropping, it could be a great time to purchase a bike without the financial burden that might have come with it a few years ago. This downturn presents an opportunity for those interested in getting into the sport to acquire a motorcycle at a more affordable price point. However, riders must also consider the long-term implications of buying in a market that is still facing uncertainty. For now, patience and strategic thinking will be key for both buyers and sellers. The road ahead. The motorcycle industry is currently at a crossroads. It must evolve to survive or risk further collapse. Manufacturers must focus on creating more affordable, practical, and reliable motorcycles that meet the needs of today's riders, rather than continuing to push expensive luxury models that have failed to sell. Riders still have a deep love for the open road, but they want fair pricing, value, and reliability above all else. If the industry can learn to focus on these priorities, it may find a path to recovery. The key question for the future of the motorcycle industry is whether manufacturers will listen to what the market is telling them. Will they adjust their focus to affordable, efficient models that appeal to a broader consumer base? Or will they continue to push premium products that only a small subset of the market can afford? The answer to this question will determine whether the industry can bounce back or if it will continue to shrink, leaving behind a smaller, more niche market. Riders still long for the freedom that motorcycles provide, but the industry must meet their needs in order to remain relevant. The road ahead is uncertain, but it's clear that change is necessary for the motorcycle industry to survive and thrive in the years to come.